Ladies and gentlemen, if you own gold or silver right now and you think just holding it will make you rich, stop. Because in the next major financial shift, almost everyone holding precious metals will lose. Not because gold and silver fail and so, but because they do. If you skip this, you won't just miss an opportunity, you'll repeat the same mistake millions before you already made. Let me tell you a story. Every few decades, something breaks. Not loudly at first, quietly. A currency weakens, debt piles up. Governments promise stability. Markets keep going up and everyday people feel safe right until they don't. In those moments, the richest investors in the world aren't panicking, they're calm, almost bored because they've seen this movie before. They know how it ends and they know exactly who wins and who gets wiped out. This isn't about predicting the future, it's about understanding how money actually works. Most people believe gold and silver are safe. They hear phrases like store of value, inflation hedge, real money. So they buy a little, they put it in a drawer or a locker or a brokerage account, and they wait. That's the trap. The hidden truth is brutal. Assets don't make you rich, timing, behavior, and understanding do. Gold and silver are tools, powerful ones, but tools in the wrong hands hurt the user. History doesn't repeat, but it rhymes. Every major wealth cycle follows the same pattern. Easy money, rising debt, asset inflation, confidence, then stress, then panic, then reset. During the rise, people chase returns. During the fall, they cling to safety. That's when gold and silver suddenly look attractive. Right when it's too late, most people buy precious metals emotionally, not strategically. They buy because they're scared. They buy headlines. They buy at peaks. When prices fall or go sideways for years, they get bored, frustrated, or desperate, and they sell, not at the top, not at the bottom, but somewhere painfully in between. That's how you lose gold and silver without them ever going to zero. Here's why most people are failing. They think in straight lines, life doesn't work that way, markets don't work that way, money moves in cycles. When paper money is strong, real assets look weak. When paper money weakens, real assets quietly prepare to explode, but the explosion doesn't happen on your schedule. It happens when the system needs it to. Most people cannot wait. They don't understand opportunity cost. They don't understand liquidity. They don't understand that holding an asset through a full cycle can take 10, 15, even 20 years. So they do what humans always do. They react, fear makes them buy, and boredom makes them sell. Greed makes them re-enter late. Retreat makes them swear. They'll never do this again. Then they do it again. Smart money thinks differently. They don't ask, is gold going up this year? They ask, where are we in the cycle? They don't ask, what's the price? They ask, what's the risk? They understand cause and effect. When governments print money faster than productivity grows, purchasing power dies. When debt grows faster than income, something has to give. When trust in paper declines, people don't run to gold overnight. They resist it, then accept it, then chase it. That final stage is where fortunes are transferred. Look at real-world examples. In the 1970s, inflation exploded. Gold went from 35 to over 800. Everyone talked about it. Taxi drivers talked about it. Dinner tables talked about it. That was the signal. The smart money was already exiting while the public was rushing in. Then gold collapsed. It stayed painful for decades. In 2008, the financial system nearly died. Central banks, trillions. Gold rose again. People said this time is different. Some made money, most bought late. And when markets recovered and stocks soared, gold holders felt stupid. Many sold right before the next cycle began. This is the even companies make this mistake. Mining firms overexpanded at high prices. They borrowed too much. Then prices fall. Margins disappear and shareholders get crushed. The asset survives. The owners don't. So what's the real strategy? First, stop thinking of gold and silver as his ticket. They are not meant to make you rich quickly. They are meant to protect purchasing power when the system is under stress. Second, understand positioning. The goal is not to go all, the goal is balance. Cash when cash is powerful, real assets when money is being destroyed, productive assets when growth returns. Third, understand behavior. This is the hardest part. The biggest enemy isn't inflation, it's you. Your impatience, your fear of missing out, your need for constant confirmation. The people who win with gold and silver are buying when they buy when nobody cares, they hold when nobody talks, and they reduce exposure when everyone is suddenly an expert. They don't marry assets, they date them. Anyone can apply this. You don't need insider information, you don't need predictions, you need principles. Ask yourself, is money becoming easier or harder? Is debt shrinking or exploding? Is confidence higher or cracking? When money is easy and confidence is high, don't chase protection assets. When money is being destroyed and trust is breaking, don't ignore them either. And most importantly, don't expect comfort. The right move almost never feels good in the moment. It feels lonely, it feels boring, it feels wrong. That's how you know you're early, not late. One day in the next major reset, people say, I wish I understood this earlier. They'll say that the gold and silver were obvious. They'll say the signs were everywhere, and they'll be right. But understanding after the fact doesn't build wealth. Acting before the crowd does. From today, stop thinking like the 99%. Stop reacting to noise. Start watching cycles. Start thinking in decades, not days. Because wealth isn't built by predicting headlines, it's built by understanding how money moves when systems break. And the next time fear hits the world, you won't panic, you'll already know exactly why it's happening and what to do. When the system starts cracking, the first thing people do is look for certainty. They want guarantees, they want someone to say, buy this, hold that, you'll be safe. That instinct is understandable and dangerous. There is no safety in certainty. There is only safety in understanding. Most people lose their gold and silver not because prices fall, because pressure rises. Pressure to sell to. Pay bills, pressure to follow friends who say it's dead money, pressure when governments change rules, tax structures, or access, pressure when media narratives flip from safe haven to useless rock. That's when weak hands transfer wealth to strong hands. The strongest investors prepare before pressure arrives. They make decisions in calm periods so they don't have to think in chaotic ones. They already know if X happens, I do Y. No emotions, no panic. Here's another uncomfortable truth. Gold and silver don't protect people who are already fragile. If your finances are stretched, if you rely on short-term needs, if you're hoping metals will save you quickly, then even the right asset can become the wrong decision. Forced selling is how wealth disappears. That's why the rich don't just hold assets, they hold options, liquidity, flexibility, time. Time is the real currency. Look at every major crisis. The people who won weren't the smartest, they weren't the most patient. They could wait while others were forced to act. Waiting sounds passive, but in finance, it's an offensive weapon. And this is where the biggest opportunity hides. The world is slowly shifting from trust to doubt, from stability to experimentation, from hard promises to soft reassurances. Whenever that happens, the value doesn't vanish. It moves, not all at once, quietly, gradually, then suddenly. Most will notice only the suddenly. By then, the game is already over. Think about regret. Imagine 5 or 10 years from now looking back at this period. Imagine knowing the system was changing but doing nothing except reacting to headlines. Imagine saying, I knew something felt off, I just didn't act. That regret hurts more than losses. But now flip it. Imagine knowing you understood cycles when others mocked them. Imagine having positioned calmly while others panic. Imagine not needing to guess because you already saw the cause, not just the effect. That's how confidence is built. Quietly from today onward, stop asking, what should I buy? Start asking, where are we? Because the people who lose gold and silver aren't unlucky, they're unprepared. And the people who win aren't geniuses, they're disciplined. The future will reward those who think differently, act earlier, and stay calmer than the crowd. And once you see money this way, you never look at investing the same again. Most people think wealth is built by doing more trades, more predictions, more opinions. But in every major cycle, wealth was built by those who did less but thought deeper. They didn't chase every move, they didn't argue with markets, they didn't need to be right every month. They understood one brutal rule. The market doesn't reward intelligence, it rewards alignment, alignment with cycles, alignment with incentives, alignment with human behavior. Gold and silver sit at the center of this truth because they expose psychology. When confidence is high, people laugh at them. When fear explodes, people beg for them. Mistake is listening to either crowd. Think about how strange it is. People trust pieces of paper backed by promises issued by borrowers deep in debt more than assets that required effort, scarcity, and time to exist. That belief works until it doesn't. And when it breaks, it doesn't break politely. That's why the transition phase matters more than the crisis itself. By the time everyone agrees something is wrong, the real positioning is already done. The quiet shift happens earlier, when headlines are confusing, when prices move sideways, when nothing feels urgent yet. That's where discipline is tested. The next phase of the global system won't announce itself with sirens. It will start with temporary measures, then emergency tools, then new frameworks. Each step will feel reasonable, necessary. Even most people will adapt without thinking. And slowly, silently, purchasing power will leak away, not stolen overnight, diluted over time. That's the most dangerous loss because you don't feel it until years later. This is why smart investors don't obsess over price charts alone. They watch policies, they watch incentives, they watch where stress is building, they ask what must happen next to keep the system alive, and when the answer is more money creation, they don't argue, they prepare. Preparation doesn't mean panic, it means clarity, it means knowing why you own what you own. It means knowing you would reduce not just when you would buy. It means never being surprised by outcomes that were structurally inevitable. Most people want comfort. Comfort is expensive. It costs you opportunity. The future belongs to those who can tolerate being early, quiet, and misunderstood. So if you hold gold or silver or thinking about, understand this clearly, the asset won't save you. Your thinking will. If you think like the crowd, you'll act like the crowd. You'll get crowd, you'll get crowd, you'll get crowd, you'll get crowd, you'll get results. But if you start thinking in cycles, if you respect cause and effect, if you detach emotion from decision, then you won't be part of the 99. You'll be watching from the other side, calm, prepared, and ahead while the rest of the world finally realizes what was happening all along. And once that realization hits, it's already too late to start thinking differently. So start now. Most people believe the biggest risk is choosing the wrong asset. It isn't. The biggest risk is being mentally unprepared for how long the game really is. Gold and silver don't move to reward patience every year. Sometimes they do nothing while everything else looks exciting. That boredom is intentional. It shakes out weak hands, it trains discipline, it forces you to confront your own psychology. This is why almost everyone loses. They underestimate time, they overestimate their tolerance, they confuse motion with progress. The wealthy don't. They build portfolios the way engineers build bridges with margins of safety. They assume stress will come. They assume surprises. They assume systems will fail at the worst possible moment. So when the moment arrives, they don't scramble. They execute. Here's the mindset shift that changes everything. You are not investing to feel smart today. You are investing to avoid regret tomorrow. Every cycle ends the same way with people saying, I should have bought earlier, I should have held longer, I should have thought more independently. But hindsight never builds wealth. Preparation does. Picture the future version of you 5, 7, 15 years ahead. The world looks different. Some currencies weaker, some systems redesigned, some promises quietly abandoned. That version of you either says, I saw this coming, or I wish I had understood. That difference is decided now, not by predicting prices, not by listening to noise, but by choosing to think in principles instead of opinions. From this point forward, whenever you hear fear or hype, pause. Ask what part of the cycle you're in. Ask who is being forced to act. Ask who has time and who doesn't. Because money always flows from urgency to patience, and in the end, that's the real warning. Not that gold and silver will fail you, but the most people will fail themselves by refusing to think differently when it matters most. Don't be one of them. At the end of every great financial shift, people don't say, I didn't have enough information. They say, I didn't have the courage to act on what I already knew. Information is everywhere. Wisdom is rare. Most people knew debt was exploding. Most people knew money printing couldn't last forever. Most people felt something was wrong, but they waited for confirmation, permission for the crowd to agree. And by the time the crowd agrees, the advantage is gone. This is why only a tiny fraction wins in every cycle. Not because they are smarter, but because they are willing to stand alone longer than others can tolerate. Think about how uncomfortable it is to be early. Prices don't move, people laugh, friends say you're paranoid, media tells you you're wrong. That psychological pressure is stronger than any market crash. That pressure is the real test. When things finally break, the pressure flips. Suddenly, everyone is rushing in. Suddenly, the same people who laughed are asking questions. Suddenly, the asset feels obvious. That's when discipline demands the opposite action. This is why wealth keeps moving to the same types of people cycle after cycle. They don't fall in love with stories. They don't confuse safety with popularity. They don't outsource their thinking. They understand that money is not just numbers, it's belief. Snorts in when belief shifts, value shifts with it. Right now, the world is closer to another belief shift than most realize. Not tomorrow, not next week, but structurally and inevitably. And the biggest